Your call on housing is interesting given Hedgeye's view that the broader economy is in a late cycle slowdown. Do you expect housing and housing stocks will generate positive absolute returns even as a global slowdown or recession, which would likely be accompanied by an equity bear market? So I guess, I'll take a shot and then I'll hand it over to you. So I guess one of the points that we made, and I think it's an underappreciated point, is, and you touched on it briefly, Josh, was that the housing recovery started almost a full 2 years after the broader economy or recovery in the economy. And so whereas we think on the macro side and from a broader perspective, we're somewhere late or mid-late cycle. Housing itself is somewhere in early to mid-cycle. The economy and housing sector are not mutually exclusive, but we do think that they can tread very medium-term paths. Do they, on a relative basis, we think the setup's positive. Positive absolute returns amidst what could be an acute collapse in equities probably isn't a high probability bet. But given where we are, depressed levels of activity, both in terms of construction and new home sales, given the stringency and underwriting standards that we've seen in the post-crisis period, if there is a recession, if we do have a correction in housing, it's probably likely to be more shallow than what we see more broadly in the recovery, probably a little quicker. That's kind of big picture. I don't know if you have anything to add, Josh.
Yeah, I mean, I definitely agree that, and I think maybe this is really the main takeaway is that, housing looks like it should be a major relative outperformer versus the rest of the market in this next downturn. And, it's hard, right, to answer whether it'll be an absolute positive performer because we don't know how bad the market's going to act. So, I think depending on your scenarios, you could certainly argue that it could be, but the reality is that I think that's a tough one. I think the way we approach housing is really just sort of thinking about it from a rate of change standpoint, thinking about it from sort of a 1 quarter and a 1 year outlook standpoint. And as we see things today, we're pretty bullish here headed into the end of the year and into 2016. But obviously we'll see what the global macro environment gives us, and we'll make that call sort of as we go.